All right, Shanna, let's picture a young person, maybe 19 or 20, trying to get their very first apartment.
Mm-hmm.
They have a good part-time job. They've diligently saved up for the security deposit, but they keep getting denied by landlords.
Well, that's frustrating. So why? What's the reason?
Well, the answer is always the same. Lack of credit history.
Mm-hmm.
It's incredibly frustrating for them because they feel like the classic catch-22. You can't get approved for things without a credit history, but how are you supposed to build a credit history if no one will give you a chance?
It's like chasing your tail. It really is. And it's such a problem that so many young people face. And honestly, it's not just young people.
Mm-hmm.
The same thing can happen to someone who's recently moved to the country, or even someone who's just made a point to pay for everything with cash their whole life.
And on the flip side, you have people with long credit history, but it's one they'd rather forget. They made some past mistakes, and now they feel like they're stuck in a financial hole they can't climb out of.
Yeah. Neither one are great, but we're going to talk about both of those groups today. And so whether you're starting from a blank slate or just from a place of repair, building a positive credit history is possible. And it's truly one of the most powerful things you can do for your financial future.
Welcome back to this episode of Making Sense of Your Sense. I'm Daniel Hill.
Hi, friends, and I'm Shanna Browning. So last week, we took a really deep dive into how to reach a credit report. And today, we're talking about how to write a great story on that report, page by page.
Yeah, we're going to lay out a clear step-by-step game plan for anyone who needs to establish credit for the first time or rebuild their credit after some past mistakes.
All right, Daniel, we're going to start with that frustrating situation you just described. So why is having no credit history a problem? I mean, to some people, it might sound like a good thing, right? But it specifically means you may have no debt.
It's a logical way to think. But in the modern financial world, it's unfortunately not how lenders see it. When a lender looks at your credit report, they're not just looking for negative information. They're also looking for positive information. They're looking for evidence that you are a responsible and reliable borrower.
And so what I'm hearing is a blank report basically gives them no information.
Exactly. A blank credit report is a big, giant question mark. The lender has no idea if you're a good risk or a bad risk. And because their business is to manage risk, they will most always err on the side of caution and say, no. It's not a judgment of your character. It's a judgment of their data. And in this case, there's no data.
Well, and I'm guessing that's probably going to affect more than just getting a loan, right?
Yes, it affects so much. As we mentioned, landlords often check credit to decide if you'll be a reliable tenant. Insurance companies can use credit information to help set your premiums for car and home insurance. And even some employers may review a version of your credit history as part of a background check for certain positions, especially those involving financial responsibility.
That's right. So building a positive credit history really isn't just about borrowing money. It's about building a reputation of pretty much financial worthiness and trustworthiness that can open doors for you in many, many, many areas of your life.
Yeah. So let's talk about that 19-year-old version of, well, me. Someone with a blank slate. What are the first safest steps to start building that positive history?
Well, I think the first, probably an easiest step is for a young person, in this case, is to become an authorized user of a parent's or a guardian's credit card.
That's a good point. Tell us how that works.
Pretty simple. So the policy card holder, say your mom, will call her credit card company and she adds you to her account as an authorized user. That way you get your own credit card with your name on it, but the responsibility for paying the bill still rests with your mom. So as long as she continues to manage the account responsibly and pay the bill on time, that payment history will start to appear on your credit report, giving you a really, really powerful head start.
That is a great option. But Shanna, what if that's not possible? Or what if you're not a young person and you're starting out on your own?
And that's a scenario too. So the next one, the next best tool is a secured credit card. So that's a product specifically designed for people who are new to credit or are rebuilding their credit.
How is a secured card different from a regular card?
So the difference here is a security deposit. To get a secured card, you make a small cash deposit with the bank, typically, I don't know, a few $100s, and then that deposit becomes your credit limit. So if you deposit $300, you're going to get a credit card with a $300 limit.
So the bank really has no risk in that. The deposit is their collateral.
That's right. That's exactly correct. And so that collateral is basically meaning that we're taking it as a hold, right? If you don't know what collateral is, it's basically a hold on that $300.
So this allows the bank to give you a chance to prove your creditworthiness. You use the secured card just like a regular card. You can use it to buy gas, groceries, whatever, and you make a payment on it each month. The bank then reports that payment history to the credit bureaus.
That's correct. And this is the most important part. You got to treat it like a real credit card. Always pay the bill on time, every single time. Don't go over the $300. After about 6 to 12 months of responsible use, you've established a positive credit history. And the bank will often upgrade you now to a traditional unsecured credit card and refund your security deposit.
So another great option to consider is a credit builder loan. This is another product designed specifically for this purpose.
Yeah, but that kind of sounds like you're taking on debt if you don't have a credit history. So tell me how a credit builder loan works.
It's a bit different than a traditional loan. With a credit builder loan, you're not actually given the money up front. Let's say you take out a $500 credit builder loan. The bank would then place that $500 into a locked savings account for you. Then you make small, regular monthly payments on that loan for a set period, say 6 to 12 months. The bank reports those on-time payments to the credit bureaus. At the end of the term, once you've made all the payments, the bank unlocks the savings account and gives you the $500.
Hold up a minute. So you're basically paying yourself, and in the process, you're creating a record of on-time loan payments for your credit report? I like it. It's brilliant.
Now, Shanna, let's shift gears. Let's talk about the other group of people. People who have made some mistakes in the past. They've had late payments, collections, or maybe even a bankruptcy, and their credit score is low. It can feel like a hopeless situation. What's the first step back?
Well, first step is you got to take accountability and you got to face that music. And we got to get a clear picture of what that damage is. Again, no judging. We can only help you if we know your story. So let's just go back to our last episode real quick. You can pull your credit report for free from annualcreditreport.com, and you can see exactly what's on there. You can't fix a problem, and we can't help you until we know exactly what that problem is.
And once you have the report, what should you focus on first?
Well, your number one priority is going to be to bring any past due accounts current, and then to focus on making every single payment on time going forward. Payment history is the single biggest factor in your credit score. It makes up 35% of your score. The impact of past mistakes will go away. It'll go away over time, but only if you replace that old negative history with new, consistent track record of on-time payments.
So what you're saying is consistency is key.
That's right.
Even if you can only make the minimum payments, making them on time is what starts to rebuild that trust with lenders.
That's right. Don't just not make a payment. Make some sort of payment, whether it's $5, $10, make the payment. And then the second most important factor you got to tackle is your credit utilization ratio. So that's the percentage of your available credit that you are currently using, and it makes up 30% of your score.
Shannon, can you give us an example of that?
Of course I can. So let's say you have a credit card and you have a $1,000 limit and you have a $900 balance on it. So you owe $900 to a $1,000 limit. Well, your credit utilization is 90%. And to us as lenders, that looks kind of risky. It suggests you are pretty much maxed out and financially stressed. So good rule of thumb is to keep your overall credit utilization below 30%. In this example, paying that balance down from $900 to below $300 is going to cause a significant and quick increase to your credit score.
So paying down existing balances is a powerful way to rebuild. And for someone in this situation, would a secured card also be a good tool to help add some positive history?
Absolutely. It's a great tool. Just like for a first-timer, getting a secured card and using it responsibly, meaning making a small purchase each month and paying that bill in full and on time, can start to inject much-needed positive payment data into your credit report, helping again to offset the older negative information.
This is extremely helpful information. The key takeaway for me is that your credit history is not set in stone. Whether you're starting from scratch or starting over, you have the power to write a new story. And that brings us to this week's actionable tip.
All right, here's what we're going to do. Your action item for this week is to choose just one of the strategies we discussed today, and you take that first step.
If you're a young person with no credit, your action is to have a conversation with your parents about becoming an authorized user on one of their cards. Just ask the question.
And if you're starting out on your own, or you're just in that rebuilding phase of life, your action is to research a secured credit card. You don't have to apply for one this week. Just go online, do your research, and read about their secured offerings, understanding the deposit requirements and the terms.
This specific action is less important than the act of starting. Building or rebuilding credit is a marathon, not a sprint. Taking that one single proactive step this week is how you start moving in the right direction.
That's right, the right direction. And that's our show for today. We hope you found it helpful. Next week, we're going to talk about all refinancing your car or a home loan.
That is a great topic that could save you potentially a lot of money. Thanks for tuning in, and remember to send us your questions at podcast@fcbtn.com and subscribe to Making Sense of Your Sense wherever you listen to your podcast. I'm Daniel Hill.
And I'm Shanna Browning. And as always, we want you to go out and make some sense of your sense.